Hello and welcome to the Morning Market Call. I'm Greg Lee. Joining me today, Jay Middleton, a senior from the Marriott School of Management studying finance. Jay, welcome to the show.
Thanks for having me, Greg. I appreciate it.
It's great having you here. So we're going to talk a little bit today about unemployment in the United States. So what does the employment rate mean for us right now?
Well, currently the unemployment rate, Greg, is at 10.2%.
Okay.
So what that means is 9 out of 10 people are still employed, which is good news, right?
Right.
Bad news is it's rising. So the last quarter it was 9.8% and now it's 10.2. What I'd like to clear up this morning is really the fact that the unemployment rate is a lagging indicator. So it doesn't really tell us a good picture of what the economy is doing. It tells us what the economy was at, where the economy was at 6 to 12 months ago.
Okay, excellent point. So it's a little bit misunderstood, this key indicator. Now, high unemployment rates, they can have a positive effect, right?
Absolutely, and I know that's surprising for a lot of people to hear. But the fact is that when the unemployment rate is high, it can mean great things for firms currently, for people who are employed, as well as for students like you and I who are going to be in the job market soon.
Okay, let's start off then with the people who are currently employed. How is the high unemployment good for people currently employed?
Well, first of all, if you're currently employed and you did not get fired in the last 6 months to a year, congratulations. The fact that you're still there means a lot to everyone in the economy because you obviously add value to the firm. When the staff is cut down, when the economy drops like it has, you are going to get a lot more responsibility than you usually would. What that means is a lot more face time with management, which is a great thing, and it also means that you are going to get a chance to show your value faster. So the chances of moving up when the economy, because it's cyclical, comes back around are really good.
Sure. So great opportunities for people that are still currently employed.
Absolutely.
What about for people who are like us and looking for jobs?
Well, first of all, we all get a little nervous, right, when we hear about the unemployment rate rising.
Absolutely.
Competition increases when the unemployment rate increases. So what that means is the best are going to get brighter. And what I mean by that is you're going to go out and you're going to work harder in school to do well in your classes, to look well comparatively speaking to your peers. It also means you're going to do everything you can do possible to get a job, secure employment by the time you graduate. So social networking is on the rise right now because people know they have to do all that it takes to get a job.
And you were pointing out before the show, this is also a good thing for BYU, for the Marriott School of Management in particular.
Absolutely. Anytime you get the cream of the crop like I feel we have at the Marriott School of Management, you're going to get a lot more competition, and that's just going to make the cream rise higher.
And no, Dean Cornea, we didn't pay him to say that. Now, you also mentioned firms. So high unemployment is actually good for firms. How so?
What happens is when a firm realizes that their customer base is dwindling, consumer interest in their products might be decreasing as well, they're going to cut costs. And what that means generally, unfortunately, is that they might just cut staff. But what it really means is they're getting lean and mean, Greg. Okay. They're actually cutting the fat. They're going to dwindle down their staff to the people that really add value, which is great for the people that still remain.
So they're going to be increasing their margins, increasing their returns for everyone, including for those who remain.
Absolutely, and I think we see the effects of that. The stock market these days, it's above 10,000, so psychologically speaking, it's a good thing for the market. And I think we see the effects of a positive cost-cutting maneuvers that the firms are experiencing right now.
Excellent. So let's close with any advice you may have for current job seekers then.
Well, first of all, I'd say don't be intimidated by the rising unemployment rate. It doesn't have to include you. You can go out and social network. You can do well comparatively with your peers in classes, and you can do all that's necessary. And the bottom line, Greg, is if you're competing, you're going to win. But you've got to rise to the occasion.
That's great. Well, Jay, thank you so much for being on the show with us today. It's been great having you here.
Thanks, Greg.
Viewers, thanks for tuning in. We'll see you next time on the Morning Market Call.
Morning Market Call is a production of the Marriott School of Business at Brigham Young University and is made possible by generous donations from Larry Tasjan and Gary Williams. This webcast was produced by Greg Lee, Tim Hart, Julie Kellett, and Jonathan Marugi.